Hey, I bought a chair. What do you do when you buy a chair? You don't sell it the next day if the value of the chair goes down and buy a better chair or a different chair. No, you buy a chair to sit in the chair. I bought a chair, I'm going to sit in it. That's the way I view a long-term investment account, like the project I started back in early 2020 by opening up a Roth IRA, putting money into positions in growth and value stocks, mostly value with dividends, in order to see where it would grow over the next 5, 10, or 15 years. Yeah, that's the kind of thing that keeps me from looking at it every single day when the market's up or the market's down. And I add 1/12 of my annual max contribution every month. And in the first few days of the month, I put that money to work, adding to positions that I already hold. So let's take a look at how that's going and what it looks like today at the end of the third quarter of 2021. Hi, I'm James Callahan, and this is the Do-Over Show, where we love to take a long-term view of life. That is, things might not work out immediately, but keep at it, change course, do what's right, what's next, and you'll find a lot of upside. Like an investment account that I opened in early 2020 when the market was tanking. It was a time when I wanted to open up and experiment with a Roth IRA. That is, I take after-tax earnings and I put them into an account and I let it grow. Like a chair I buy, I just let it sit there. And I don't check it every day. I let it grow in value. I contribute to the max each month, 1/12 of the calendar year investment, and I see what happens to that money. Now, investments like this are expected to sit, I expect them to sit in here for 5 or 10 or 15 years, and I'll add to them monthly, dollar cost averaging. And I won't follow the ups and downs of the market every day checking the account. Because when you do that, you really mess with your long-term brain, that delayed gratification that's needed to have some genuine growth and build value in an account like this. So here's a quarterly update. The third quarter of calendar year 2021 is over, and I wanted to give you a peek into what I own, how it's performing, what I do with it when it takes a little dip like it did last month, and what I do moving forward with this long-term horizon. So the total value of the account as of September 30th, 2021 was $15,070.48 at a cost basis of $13,017.99. So that's about a 14% increase, or about $2,052.49 about, over my initial cost basis. Now that comes from a combination of growth and the value, the dividend value that comes to me monthly or quarterly from these different investments. So here's what I hold as of the end of the third quarter. I didn't sell out of anything. I held everything, and I added a speculative penny stock to this just for some upside growth to see what can happen. So here's a list of what I hold as of today. Altria, Apple, Associated Bank Corp or ASB, B&G Foods, Duke Energy, an ETF, Ph.D, which is a low volatility, high yield ETF, Iron Mountain or IRM, Pfizer, yep, the drug company. Here's the new one, SQFT or Presidio Property Trust, it's a REIT. Here's another REIT, Realty Income Corp or O. Here's another REIT, Simon Property Group or SPG, and Walgreens Boots Alliance. Now, when I look at the performance on the yield for the position, the total yield of all of these positions combined is just under 5% at 4.8%. Some of them are a lot higher, like Altria, which took a dip recently, and that's almost up to 8%. B&G Foods is about 6.4% yield. Presidio, that penny stock speculative play, I just threw a little money at that, and that's at about 10.8%, almost 11%, depending on how this $3.50 stock performs. But it pays a monthly dividend, and I start to build a little bit more of a position from the small start that I had. So the estimated income I receive in dividends from the value stocks that I own for the year is estimated to be $716.77. That's that 4.8% yield.
I know. Holy.
Oh, and I also said that in September, the account took a little hit. It's down $290.34 or 1.9%. And that has to do with a combination of market factors. September is a seasonally weak month. And then there are some political and economic issues that the country faces with the debt ceiling and an infrastructure plan and the negotiations and the games of playing chicken with that. So the month of September was a great time to add to my positions. You see, when prices go down on things that I'm going to hold for 5, 10, or 15 years, a sale sign flashes in my head. And I realized this is a time to get in again and again each month. Now, if the market's up sizably next month, I'm not going to hold off. I'm going to dollar cost average. But I feel better about putting more money into things, especially if it doesn't raise my cost basis significantly. Now, when I look at things like dollar cost averaging and if the market's up or the market's down, what it does to my cost basis, I can look at some of the high performers. Like I'm up about 20-25% on Apple. I own just 8 shares. But that means that if I add more to it now, which I do about every other month, that means I'm going to raise my cost basis. Now, other stocks that I'm down, the SQFT, the new Presidio position that I'm in, I have 212 shares. It's about $3.50 a share. So that's about $913 investment. And I'm down 12, almost 13% on that investment. But I get the monthly dividend and that compensates for some of that downside. By the way, a little aside on this Presidio, this penny stock, the speculative that I added. They're an unusual REIT, a real estate investment trust, in that they have to pay out, they have about $6.5 million of annual income, so they have to pay out most of that in dividend income. And they do so on a regular basis at a little over 10% for the cost of the shares that I own. But the goal of the company is to acquire high-quality office buildings located in strong, stable secondary and tertiary markets throughout the West and Midwest. So they're a speculative or niche play trying to take advantage of undervalued, underutilized properties in an area where there's a good infrastructure and there's a potential for greater upside. It is speculative. It is small. And that's one of the interesting combinations that after you build up some really stable value stocks and some quality growth stocks, like some tech stocks that just are on top of the market leading the indexes, then you can diversify a little bit. Now, I don't want to go crazy and throw so much into the account that I get more than 10 or 11 positions, because then I'll never get the actual return on the quality, because I'll have so much push and pull between all of my speculation and the quality stocks and value stocks that I'm interested in. So I try to avoid being over-diversified, or as Charlie Munger calls it, diversified. You can check out a video I did about that. Hey, when I look at the overall character, the balance of what I hold in the account, I'm very comfortable with it. That keeps me from checking the account daily if one sector bounces high or skews the market. And I look at it and I'm in tech, I'm in growth, I'm in value, I have a bank, I have some pharmaceuticals, Pfizer, so I'm in the drug company space, and I do have a lot in REITs, real estate investment trusts. And that's because I have a personal investment in seeing real return on real estate. Not just in owning real property, but in getting the upside to the fluctuations that are happening today in the real estate market. So I'm comfortable being a little more overweighted in that area. But hey, I'm not a financial advisor. This is not financial advice. This is just for education. I'm sharing with you what I'm doing and how it feels and what the upside or downside is of this. And you've got to make your own investment decisions and check with a professional. But for me, this is a good balance. And this is the kind of thing that, yep, like a chair, I'm willing to sit in a good quality chair for 5, 10, or 15 years. Hey, I bet you have a favorite chair where you live. That's your go-to. Maybe even your family knows, hey, that's his chair. Yeah, that's the kind of thing I want this account to be. So when I look at this account, I say, that's my comfortable chair. That's where I belong. That's where everything is right in the world. No matter what is on the news, no matter what the market is doing, I get to sit in my favorite chair. And so far, that favorite chair is not letting me down. Hey, and thanks for being part of the Do-Over Show and for checking in on this long-term investment update of this Roth IRA. And could you please tap the like button, because it really helps. Hey, and while you're down there, consider ringing the notifications bell and subscribing so you don't miss the next episode of the Do-Over Show. I'm so glad you found me, and I found you. Thanks.